big question. What does 2021 look like real estate wise? And do you have some reasoning behind that? Okay, so I've had a few people ask me what do I think 2021 will look like. 2021, I believe, is going to look a lot like 2020. What do I mean by that? You're still going to see pandemic issues arise. You're going to see notoriously high prices. You're going to see notoriously low interest rates, and you're going to see a lack of supply. So, spoiler, that's what I'm seeing 2021 look like. I'm not making that prediction based on my own gut feeling. I'm kind of doing a lot of reading. There was one article in Forbes that really gave a really good synopsis of that. I'll put a link in the description so that you guys can see that, and then I'll do some breakdowns on those points. The article is Experts Predict What the Housing Market Will Be Like in 2021. It was written by Brenda Richardson. She is a senior contributor for Forbes. I really liked the article. I think the article was well written, well done. And she interviewed quite a few people to find out what they thought the market was going to look like. So let's kind of dive in here. Danielle Hale, Realtor.com chief economist, she said, what we expect sales growth 7% and prices to rising another 5 to 7% on top of the 2020 already high levels. While we expect mortgage rates to tick up gradually, sales prices will be propelled by still strong demand and recovering economy and a still low mortgage rate. High buyer demand and still lagging supply will keep prices growing, but at a slower pace than 2020, as buyers contend with mortgage rates and price increases that create affordability challenges. Okay, so really, I could probably stop right there. I think Danielle Hale has a really good grasp of what I'm seeing and what I'm reading. She does touch also in the article about the millennial and the Gen Z buyers. Those millennial and Gen Z buyers, they are playing a huge a role in the housing market because the millennials are hitting in their 30s, which is kind of that prime time as far as buying and upticking in the market. So you're going to see them play a huge role in the real estate moving forward, because they're going to be our primary generation that's going to be buying and selling. Robert Dietz is the senior vice president and chief economist for the National Association of Home Builders. He says some interesting things. He says with home builder confidence at a near record highs, we expect that the continued gains for single family constructions, albeit at lower growth rate than in 2019. Some of the slowing of new home sales growth will occur due to the fact that the growing share of home sales has come from homes that have not started construction. Nonetheless, buyer traffic will remain strong given favorable demographics, a shifting geography of housing demand to lower density markets, and to historical low interest rates. I did a blog on lumber cost and the challenges that we're having there in the new home in new home construction. Interesting read if you're kind of wondering where that market is. Elena, let's go to Todd Teta, Chief Production Officer at Enum Data Solutions. We're exiting 2020 with a number of dynamics that will more than likely keep this crazy housing market going strong. There's an incredibly low inventory with less than 500,000 homes for sale. Mortgage rates are at a 50-year low, and there's no sign yet of distressed sellers from the recession from the recession coming out. These supply and demand factors which push prices even higher in the first half of the year. Inventory and pricing should ease a bit in the second half of the year, and a larger economic headwind could start showing up. Until then, buyers should be cautious and sellers jubilant. I like that word. So yeah, I think I would agree with that. Selma Hepp. I did like something that Selma said here. She says, while 2020 did not surprise with its fair share of surprises, 2021 could still have more surprises in store for us. Still, expectation for the housing market to remain generally positive. First, interest rates, which have motivated many buyers in 2020, are expected to remain low and will help some of the affordability concern resulting from the rapid home price appreciation seen in 2020. In other words, low mortgage rates continued to provide greater purchasing power, especially for first-time home buyers. She goes into a little bit of the details. If you want to read a little bit more into hers about the millennials turning 30 and how that's kind of a critical reason why we're really focusing on millennials going forward at this point. Let me see. Okay, so Daryl Fairweather, from the chief economist from Redfin, although the U.S. may be able to vaccinate most of its citizens by the end of 2021, many countries will struggle to distribute vaccines. Thus, the global economy recovery could be much longer, which would make U.S. mortgage-backed securities attractive to international investors, keeping mortgage rates low, even as the pandemic hopefully nears its end. Americans will continue to buy homes that fit their new lifestyle. As a result, 2021 will see more home sales than in any year since 2006. Annual sales growth will increase from 5% in 2020 to 10% in 2021. You're seeing that 5 to 10% growth. I've seen that in a couple different articles, folks predicting that number. So I would be relatively confident in saying that that's probably true. Again, we have to always keep all these things in perspective. Real estate is tied a lot to what's going on in the world and in the U.S. economy in general. So all of these numbers that we're throwing out, be very careful using them, other than to keep in mind that's where these projections are looking like. And 2021 is projected to be very similar to 2020. So you're going to see that same kind of feel in 2021 that you're seeing in 2020. Antone Thompson, Executive Director of the National Association of Real Estate Brokers. As the nation continues to grapple with COVID-19, the 2021 housing market will continue to have low interest rates. Congress will likely approve funding and legislation for the Biden-Harris administration for the creation of new closing cost and down payment assistance programs. And tax credits to help increase the rate of black and minority homeownership. I think what you're going to see there, you're definitely going to see some more programs coming out of the Biden-Harris administration, out of the Congress. And so what you're going to see is a lot of people are going to be able to get things that they wouldn't have been able to get to in the past. But that's a good thing. That's going to help the housing market growth. You're going to see a lot of first-time home buyers hit the market because of first-time home buyer programs. So it's going to be really interesting to see what kind of policies that they're going to come out with. David Howard of the National Rental Home Council Executive Director, he said something pretty interesting, because he said that the millennials, and I want to read his exact quote, because he says, Much of this move is led by the millennials, who are transitioning squarely into the prime household formation years. However, that generation is also the least wealthy at a time when the cost of homeownership continues to climb. We believe these demographic factors bode well in the coming years for the rental housing market. I wasn't specifically talking about the rental housing market here, but this is a very interesting take that for all my investor clients, that it looks like the rental market is going to come out very stout. It's going to continue to be very strong through 2021. So that's good news for a lot of my investor clients. Okay, so Lawrence Yun, National Association of Realtors chief economist, and again, some of these names I'm butchering, and I hate to tell you that. I'm very sorry for that. Home sales surpassed with a surge in the second half of 2020, and the momentum will carry into 2021. The record low mortgage rates have been the key factor for home buying, even in a difficult job market condition. As we enter into 2021, jobs will steadily recover, especially knowing the vaccine distribution is just around the corner. Interest rates will continue to be favorable since the Federal Reserve has indicated as such. and the supply will rise based on the number of housing starts in single family homes, thus giving consumers more choices and, more importantly, will tame the price growth. Demand could be stronger in the outlying suburbs and in more affordable metro markets, while the downtown locations could witness softer demand. Again, I think I agree with most of what he says there. I don't know that I agree with all of it. I definitely think you're going to see, I'm not seeing the what he's saying there with the supply will rise. I think you're going to see that probably by the end of 2021, maybe into 2022, but I'm not seeing it before then. Another interesting one. Okay, Jared Kessler, CEO and co-founder of EasyKnock, as companies announce plans to allow employees to permanently work remotely, high-tax cities will continue to see talent drain as people relocate in search of cities with lower costs of living. Second-tier cities like Austin, Charlotte, and Tampa will experience a residential building boom. I think that's already happening, or we're already seeing that. That's already taking place. So I definitely think I agree with that statement. As COVID-19 rages on and new restrictions likely to be put in place, the financial options for homeowners is still growing scarce. 2021 will see an increase of alternative financing options for homeowners to provide additional flexibility during times of financial crisis. That was echoed earlier by saying the Biden-Harris administration is definitely going to open up some new, what I would call creative financing. The federal government will create an incentive stimulus program for landlords and homeowners to allow renters or owners to remain in their homes, and will extend the eviction moratorium to help to line up with the vaccine rollout. I did also a blog on the eviction moratorium. I'm not sure how I feel about that. So far it's been kind of one-sided, and I'm not sure I 100% agree with it. But it is. I think that if they can make it better, I think I could get more on board with it. I'm totally not going to get this name. Tindy Calepsis, Lending Tree chief economist. The housing market should continue to be a bright spot in 2021. Key to this will be the mortgage rates that we expect to remain as low as the Fed keeps up with security purchases. A less appreciated factor is the savings rollover of 2020 that will support home purchases by wealthier households. Additional fiscal stimulus could also find its way into the housing market. The new Biden administration policies may also increase to the housing market through things like down payment support. Finally, this is the part I'm going to park on for just a minute and probably end on. I don't want to drag this thing out. We're already at 13 minutes. So this is an aspect I just absolutely did not think of, and I'm really impressed with it. The Biden administration policies may also increase access to the housing market through things like down payment support, which we've kind of already said that. Finally, and this is the part that kind of blew me away here. Finally, student loan forgiveness, which has already been said that they're going to do this, could also boost the ability of many to afford buying a home and saving for a down payment. And I do believe that will be a case as soon as they give student loan debt forgiveness, which is coming down the pike. You're going to see more people be able to afford the home, kind of jump back in the market, which is of course going to invigorate the market again, and is going to reduce the amount of supply. So really interesting. They also said there are some downside risks to this outlook. The economy will be recovering as vaccine lead us down the path of normalcy, but the labor market could remain weak. A tepid labor market recovery would be accompanied by a tepid income growth. Job losses are moving up the income scale and transitioning to permanent losses from temporary. Lending standards are likely to tighten further as the end of forbearance and foreclosure moratoriums are a wild card, potentially weighing on home prices in some areas. The rent crisis is another wild card that could bleed into owner-occupied market via adding supply or affecting the financial markets. I want to roll backwards just a second and talk about that, the student don't loan forgiveness part, because of the fact that we're already seeing this very low supply. We're seeing a very low interest rate, and then you have the situation where we're going to have a student loan forgiveness if it comes down the pike. You will see a huge jump into the market, which will again most likely drive up the market cost, and it will drive down the supply. So again, I'm not going to read all of these. It's a really good article. I will put a link to her article in here. She did a phenomenal job bringing this out. But I did want to go over some of those high points. What I see 2021 looking like is a lot like 2020. You're going to see housing prices rise. You're going to see a record low interest rates. And if you're a seller, you're going to love it. If you're a buyer, you're going to hate it, because you're going to see lots of bidding wars. You're going to see hard to find what you're looking for. But again, every market has its high points, and I think you're going to be able to find what you're looking for if you are steady and you are serious about looking. You will find it. So anyway, I hope this helps. I hope this has answered some questions. If you do have more questions than that, feel free to send me a text or an email. I'd love to sit down and chat with you about maybe your housing goals for 2021. If we can help you at all, please feel free to reach out. Skip Geiser, Plumtree Real Estate Marketing. We appreciate you. Thank you.